I've been a Bitcoin noob for too long, but I feel like I'm finally beginning to blossom and mature. After all, speaking of maturing, I have a level 99 RuneScape fishing coffee mug with a green glass straw. But now, let's talk about Bitcoin. I first bought Bitcoin as a joke on January 5th during the Georgia runoff election while we were talking about needles. Yes, I know this is a very weird introduction, but this is all true. But over time, I've grown more and more interested in Bitcoin. Now, this isn't a super deep dive on Bitcoin, but it is a deep dive on my strategy and how I want to invest in Bitcoin and why you might consider investing the way that I plan to invest in Bitcoin. First, there's little doubt in my mind that the blockchain technology is the future of finance, and it's helpful to have a little bit of a background in this thesis just in case you're not super familiar already with blockchain, just to understand my thoughts, and if you are already super familiar, hey, critique my thoughts and my opinion here. Leave me a comment, I'll make sure to read as many as I can. I'm super excited to see what you think. But here's the thing. Blockchain has the capacity to eliminate commercial banks, be safer by preventing fraud with a transparent history of all transactions, be faster by eliminating disasters like the Robinhood shutdown or what led to the shutdown of Robinhood ending the trading of GameStop and AMC and costs and all this disaster because a T+2 could be solved via the blockchain. In fact, the SEC is already studying blockchain security settlement to solve this exact problem before it ever even happened. The problem is that experiment isn't planned to be done, or that study isn't planned to be done, with a company called Paxos in coordination with the SEC until December of 2021. So unfortunately, the GameStop crisis came a little bit too early. But ultimately, cryptocurrencies using blockchain technology are a phenomenal tool for cross-border transfers and trade as well. You don't have to worry about currency exchanges. You don't have to worry about these interbank transfers and pit stopping there and federal clearing here and their central bank clearing. It's all done direct, and it's transparent, and it's fast, and it can be instantaneous. Even though it technically doesn't even have to be instantaneous, it could be. Now, to me, Bitcoin isn't gold, and it won't replace the world's monetary systems. Those are hopes that others have. I think those are valid arguments that maybe Bitcoin is a digital gold, that maybe Bitcoin has the potential of replacing the world's monetary system. Not a belief that I hold. Hey, if those things end up being true, it just increases the thesis. I'm going to assume that those things won't be true. It's kind of like a worst case scenario. Those things won't be true. Or maybe it's my base case scenario, which it is. But anyway, to me, there will always be a fiat currency. There will always be a Jerome Powell cranking the money printer, at least as long as we stay in this current, present, future, if that makes any sense. But anyway, what I expect we'll have is a tokenized fiat. So maybe instead of walking around with dollar bills and credit cards, we'll have things that let us transact with tokens or digital currencies, but digital currencies that are still fiat. So basically, instead of having a dollar bill, you have a digit on your phone that says, cool, you got one coin. And it is basically the same thing as $1 bill, but it's just digital instead of paper. But it's still fiat. They can still print more of it. They can still manipulate it and pull strings the way they want. Sure. So we might have tokenized fiat in the future. We'll have more and more stable coins in the future. And Bitcoin obviously is a type of coin, but it's certainly not stable. The value goes up and down like crazy, and we can go into a detailed discussion on the difference of stable coins and non-stable coins, assets like Bitcoin, but that's not so important here. Instead, I think simplifying my thesis is most important. Here it is. The blockchain will become more important of a part of our lives, whether or not we want to be a part of it. That's an important thing to think about, because many folks who hear of blockchain put their head in the sand and say, too complicated, I don't understand, I'm not interested. But the blockchain and blockchain technology will become more present, whether we like it or not. More and more banks are going to start offering stablecoins using blockchain services. More and more deposit accounts, like savings accounts and checking accounts, are going to offer better benefits if you use a stablecoin with blockchain technology. And because of this transition to the blockchain, In my opinion, more and more people are going to realize the power of the blockchain, because once you start using it and you go, oh, I get more benefits of this, I get more safety and speed and efficacy with this is not that bad. What happens naturally thereafter? Well, more people and more institutions realize, wait a minute, if blockchain is good, what's the number one and maybe the number two investment I can make in blockchain? Bitcoin and maybe Ethereum. There are other investments as well. Of course, we could talk about Dogecoin and we could talk about Litecoin and many others. But for right now, we want to focus mostly on my investment thesis here. The more the blockchain becomes familiar, the more I expect Bitcoin to increase in price and value over time. However, like I mentioned earlier, Bitcoin is very volatile, which is very different from risk, which is important to remember as well. Volatility means prices go up and down a lot. Risk means something has a higher likelihood of going to zero. In my opinion, and I have a high conviction of this, Bitcoin is not going to zero. I do believe that Bitcoin could see a substantial sell-off between March and July of 2021 if inflation ends up falling like I expect it might following March, April, and May. We'll see. There's a potential that Bitcoin could have a sell-off. But to me, my thesis will be consistent, and my strategy with Bitcoin will be consistent. Bitcoin is going to be something that will be a part of my portfolio going forward, and it will become a larger part of my portfolio as time goes on. Over the next 4 weeks, my goal is to have a total of $1 million invested into Bitcoin. That will represent around 3.5% to 4% of my stock market portfolio. I'm going to lump crypto and stocks together here. And my plan for the rest of the year is to end up more than doubling that. And by the end of the year, having over $2.5 billion, I wish billion, $2.5 million invested into Bitcoin. This means very soon, Bitcoin will represent somewhere between 8% of my portfolio, maybe as low as 5%, but potentially as high as 9% of my portfolio, depending on kind of how my portfolio lays out. I don't think I'm going to have Bitcoin be any more than 10% of my portfolio, but I do want Bitcoin to be a substantial portion of my portfolio. Now, my goal over the next 2 years, starting this Thursday, once my wire clears, is to start building this portfolio slowly with cash that I have available as my income comes in. And then for the rest of the year, keep building and building this and just dollar cost average up, mostly with Bitcoin, though I may add a little bit of an Ethereum exposure. It'd probably be something like 80% Bitcoin and 20% Ethereum. We'll see. I'm still researching Ethereum, so I'm not quite ready for the Ether just yet. Now, how am I going to do this? So this gets interesting. Right now, like a noob, I have some of my Bitcoin actually I have all of my Bitcoin over at Robinhood. And this kind of sucks because in order for me to move my Bitcoin from Robinhood, I actually have to sell it and move the cash. There's no brokerage transferring my Bitcoin, unfortunately. If I do that, though, I end up paying a substantial amount in taxes on the Bitcoin that I own at Robinhood, and I have no intentions of selling this currency. So I've got, let's say I'm stuck between a rock and a hard place. I currently have about $120,000 in Bitcoin profits, and 55% of that would go away to the federal government and state of California solely by me making a transition from Robinhood to another account. So there is a possibility that I may decide to keep some of my Bitcoin funds at Robinhood solely to avoid a 55% immediate penalty on something that I actually don't plan on selling anytime in the near future. I plan on buying and hodling. Now, over the past 2 weeks, I've been looking at alternative services. I've tried Coinbase, I've looked into Coinbase Pro, I've looked into Gemini, and all of the services have their own pros and cons. And this video is not designed to be like, and I want to come across as this is an ad for this particular product. I want to explain why I chose a particular product, and then you can make your own decision. Now, I want to be very clear about this. No matter which service I would have ended up going with, whether it was Robinhood or Coinbase, Coinbase Pro, Gemini, or something else, I would have eventually, because they all offer one, had some form of, yes, an affiliate link for one of those platforms. And yeah, that does help pay the bills. So I do have an affiliate link for the platform that I have decided to use. And that affiliate link is meetkevin.com/BF, like Bravo Frank, except it stands for BlockFi. And now I'm going to explain why I decided to use BlockFi. And just keep in mind, if you go to meetkevin.com/BF, or for short, metkevin.com/BF, you can get up to $250 for free. Take a look at the chart on screen here, and you'll see the different tiers that they have when you deposit money with BlockFi. You'll get totally free money in whatever cryptocurrency you desire. Okay, so here's why I chose BlockFi. First, I really like this principle a lot because it seems intuitive to me, and it's the benefits that I would look for in investing in Bitcoin. So BlockFi has two really neat things that I like. And the example that I'm going to give is, let's assume I have $2.5 million in Bitcoin, and Bitcoin is $50,000 a coin. Well, if I have 50 BTC and I invest that into my BlockFi account for 1 year, I will actually get paid, according to the current calculator, and obviously the interest rate is subject to change, it's a variable rate. But as of today, I would earn about $76,696. That works out to a good chunk of money every single month. In fact, I would be making more than $6,380 per month simply for parking something that I'm investing into anyway at BlockFi. Now, initially, when I heard this, I'm like, too good to be true. Come on, man. Why, if I have my Bitcoin at Robinhood, do I not get paid dividends? And over here at BlockFi, I do get paid dividends. That doesn't smell right. What's the scoop? So I reached out to BlockFi to get an understanding of what the HE double hockey sticks it is that they're doing. And basically, what BlockFi does is they take the Bitcoin that you have on account with them, that is, you buy Bitcoin on their platform, they're holding it for you, kind of like a savings account. They take that and they lend it out to large institutions like Fidelity or other hedge funds or whoever has a massive demand for Bitcoin overnight or for a few weeks or for a few days. They lend it out. It's always available for you to withdraw at any point, but in the meantime, it's technically lent out and it's sort of being reused. And because of that, they're able to charge higher interest rates. Maybe they're able to charge 8% interest to, let's say, a Fidelity for overnight lending of Bitcoin. And BlockFi is essentially providing Bitcoin liquidity by doing this, so there's a benefit there. And then maybe they pay you 3 to 5 to 6%, depending on how much you have on deposit with them. And basically, BlockFi benefits by having the spread or by taking the spread. That's how they make their money. And this makes sense to me, but it also makes me have some concerns. Like, wait a minute. Like, what if somebody that you lent my Bitcoin to goes bankrupt? And this is where having a little bit of an understanding about margin is helpful. So the way margin works is basically if BlockFi says, hey, we're going to lend 10 million Bitcoin to Fidelity, and all of a sudden the value of the collateral they have with Fidelity, whatever collateral Fidelity provides to BlockFi, whether that's cash, which it probably is, probably cash or some form of stable coin representing cash. If for some reason Fidelity's liquidity goes down or their collateral amount goes down because the prices of Bitcoin have fluctuated, who knows, something happens, then in theory, BlockFi could margin call Fidelity and protect the underlying assets. And because of this, BlockFi says they try to always maintain an over-collateralized balance sheet, which is just a fancy way of saying they're trying to keep more money around so that in the event, if there ever had to be a margin call or there was ever a crisis, people wouldn't actually lose their coins. Now, the only example we have with BlockFi, because they've only been around since 2017, is what happened in March of 2020. And that's when Bitcoin values lost 53% in 1 month, and BlockFi says, hey, we survived that, we're comfortable we could survive future issues, and we actually had no issues in March of 2020. It was just business as usual. Now, in theory, it wouldn't shock me if Bitcoin could potentially fall 80%. I mean, think about it. It's at $50,000 now. If it falls 80%, it goes to $10,000. I mean, a few months ago, $10,000 for Bitcoin was like, oh, that's a good price. In theory, that could happen again. So there are definitely some risks, but then again, the way I've balanced this out a little bit, at least myself, is If I have my money at Robinhood and Bitcoin loses 80%, it's kind of like I lost 80% at Robinhood anyway, and I lost 80% over here. Yeah, there might be some niche case scenario where an entire financial crisis happens and the entire system breaks apart. So there is a little bit of risk that gets inherited when you use BlockFi, but that's because they're also providing you this interest payment. So I do want to provide that as a caution if you're looking into BlockFi and you're considering going to metkevin.com/BF to look into this, because I am. And don't do it just because of me. Do your own research on this. Know that there could be a little bit extra risk. How much that risk is it 1 in 1,000? Is it 1 in a million? I don't know. I can't quantify. But this is the best way I could sort of explain the difference here. In fact, I specifically asked BlockFi, what if you lend all my Bitcoin to Melvin and they go bankrupt? They're pretty confident in their response that they're overcapitalized to where they have enough cash on hand to solve any kind of issue. And remember, they have the ability to have instant margin calls in the event there's any kind of issue. Especially since, after all, these are all blockchain-based contracts, which are known for being fast. So in theory, a margin call could almost be near instantaneous. So I'm comfortable enough in this, but I wanted to provide a little bit more insight in this. So really, what you have to ask yourself is, would you rather have Bitcoin that pays you dividend or not? If you want Bitcoin that pays you dividend, BlockFi could be an option for you. The cool thing about BlockFi is if you wanted to, and this to me is a little risky, but you could even borrow money against your Bitcoin on BlockFi, which actually provides liquidity that usually Bitcoin doesn't have. Usually you can't get a loan against your Bitcoin. Well, BlockFi now does that. They provide loans against your Bitcoin. Again, go to metkevin.com/BF for BlockFi. Now, there are other companies that do this as well. I have not gone deep on, for example, Celsius, so I can't really talk about them. But I can tell you that the benefits that I found at BlockFi were much more interesting to me than what I saw at Coinbase or Gemini. And part of that reason is because Gemini and Coinbase charge me fees to buy Bitcoin. BlockFi, at least this is what they say, and I'm going to do comparisons on this, but BlockFi says they sell you Bitcoin at spot, which is exactly what the market price of Bitcoin is. Coinbase and Gemini, they collect most of their revenue from fees. So if you want to buy a Bitcoin, you pay a certain percentage in fees when you check out for that Bitcoin. BlockFi doesn't charge that fee because they're making money on the spreads from lending and doing margin accounts. To me, this is really just the future of crypto banking. In fact, BlockFi calls themselves a neo-bank because they're technically not a bank, they're not FDIC insured, they're not backed by the SIPC. You have to be a little bit more diligent. So some people suggest, hey, have some money with BlockFi, have some money with Celsius, I don't know. For me, my goal is simply to grow my BlockFi account and maybe keep my 9 Bitcoin that I have right now at Robinhood because I don't want to pay the taxes. But my goal is to get a BlockFi account to 7 figures as soon as possible and to grow it to $2.5 million by the end of the year. Hopefully, I'm filming this here on February 16th, hopefully before the end of the year, I can make a video and show that that has become a reality. I'm excited for that because I also want to start showing you those dividends coming in. So I'm pretty excited. I'm pretty confident, and this is my strategy. This is what I've chosen. You do not have to copy this, but this is the strategy that I have chosen for investing in Bitcoin and getting passive income from Bitcoin while doing it. Now, many of you are like, Kevin, you don't usually like dividends because you have to pay taxes. And yes, this is true. This is very, very true. I do not like paying taxes. But remember the choice I have. Invest in Bitcoin and get no dividends, or invest in Bitcoin and get dividends. And then people say, but Kevin, you have a little bit more risk at BlockFi because of, that crazy financial crisis scenario you explained. And then I say, yeah, but let's say that's a 1% risk or a 0.5% risk or a 1/10% risk. Well, I'm kind of already paying that risk premium if I'm at Gemini or, a Coinbase because they're charging me that as a fee up front. So it's like I guaranteed bake that lost money in, that percentage of risk. If I calculated an expected value. Anyway, those are my thoughts. Now, another cool thing that I learned about BlockFi is if I wanted to transfer my Bitcoin to, let's say this was a crypto wallet, I could do that. I could put in my crypto wallet address and get my money withdrawn via the blockchain directly into my crypto wallet. Now, going to cash from Bitcoin, that is a little bit more challenging. So if you're going to invest in this, make sure you don't want to quickly convert it back into cash. I don't know what the process is for that. That could be a little bit harder. But the point is, if you're investing in Bitcoin, you kind of don't want to go back to cash, because if you go back to cash, you got to pay taxes. So yeah, be careful. Once you sell an asset, taxes. So anyway, go to mettkevin.com/BF if you're interested in getting up to $250 totally for free. This is the strategy that I'm following. I'm super excited about this. I'm thrilled about this. I'm kind of jumping up and down on the inside about this, and I'm happy that I'm able to share this with you, and thank you so much for watching to the end of this video. Consider subscribing, consider sharing if you found this helpful, and folks, we'll see you in the next video.